Yo, what's up, everybody? It is Thursday, May 8th. I have an update on the market. So, market was up today, but it hit a level. Some of you if you're a subscriber, you know because I sent this out like a week ago or something. I had 57.25 as a level that if you're trading to either take profits or initiate a short position in the S&P. We went up to 57.41 in the June S&P, and we sold off. So that was my level. Now, what I see happening is that we have another one of these reserve builds going on. In the week ending yesterday, May 7th, reserves in the system were up by 200 billion in a week. Now, next week, we're going to have a Social Security payment and a quarterly interest payment. So it's going to be another big week of reserve addition. So this is, we're getting back to the bilge pump story. Massive waves about to crash. One wave already crashed into the boat. Next week, another wave going to crash into the boat. So these are disruptive. As I've explained in the past, we're under the debt ceiling. So Treasury operations in terms of selling bonds, it's constrained by the debt ceiling. And so what we've seen happen with these reserve additions is that they have been negative for the market. So I'm calling this right now as a short term, and I want to emphasize a short term. We'll see a market pullback. The fiscal flows are still very strong, so I would use this pullback if it happens, and I'm pretty sure it's going to happen into next week. I would use that as an opportunity to buy. Bonds were down today. Look, this is something else because England, Bank of England cut the rate today. And the Bank of England, their statement was, look, we think that the impact of the tariffs are going to be a problem for the economy. We think it's going to be negative for the economy. So we are preemptively cutting interest rates. Other countries are doing the same thing. The Fed, Jerome Powell, the only central bank, even Japan stopped raising interest rates, which effectively is like a cut for them. But Powell is sticking to his guns. I talked about this yesterday, how he projects. He shouldn't be doing this. Especially, I think, if you consider the fact that all these other central banks are saying this global trade war is going to be negative for economic activity. And Powell's sticking to his guns saying it's going to be inflationary and this and that without any evidence. Now, maybe he's going to be right. But I also think there's an element in Powell's behavior or his decision-making process. There's an element in that he wants to get back at Trump. Trump has been publicly criticizing him. And this is the way that Powell is getting back at him. So the bond market is stuck in this 4.25 to 4.5 because, the Fed right now is on hold. And so we saw yields pop up to 4.38 today. Sorry, it was my hike. The other thing that caught my attention today was a sharp move down in gold. Look, with fiscal flows strong, I think you got to buy these gold dips until further notice. If we start to see something in the fiscal that, throws up a red flag or something, cautionary, and I am looking at one thing, which is the employment tax deposits. I mean, the more I look at that, it really looks like that uptrend in those tax deposits, which I use that as a barometer of the labor market, wages, salaries, employment, etc. if that uptrend breaks, I think it would be the first sign that we're starting to see some negative impact from everything that's going on right now. And it looks very much like that uptrend is about to break any day. But so far, it's holding that line. If you want to see that graph, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial to MMT Trade, and I will happily send that to you and explain whatever. Anyway, that's the update for today. Please like and subscribe if you've done that already. Thank you very much. And don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. By the way, some of the other market forecasts that I made recently, which were sent out to subscribers, natural gas. Several weeks ago, I said this is shaping up to be a major move in natural gas. You had producers almost flipping their short hedge to long. They're basically flat. Very bullish development. Okay? So, and I gave some stocks related to that, and they're doing very, very well. So, natural gas, there was another one. It slipped my mind right now, but if I think about it, I'll put it in the video tomorrow. What else? That's it for now. Have a good one. Bye.